Hello guys, welcome to my YouTube channel. Here with me I have an analysis on XAUUSD from the daily time frame. So just watch and see how I do my simple top-down analysis, and I'm using gold for this example. From the daily time frame, if we look at it, we can see that gold is bearish. The daily time frame is showing that gold is bearish, but there's something we need to pay attention to. Internal structures on the chart is very important because those are areas where price can easily change bias. But if you are focusing on the overall structure, you might miss out a lot of entries if you don't pay attention to the internal structures. So let's break down this chart and see exactly what I am talking about by paying attention to internal structure. So from the daily time frame, if we can see that after gold, this break of structure here, I will consider this one as a break of structure because we have a change of character here. We have this break of structure where happened price tap into a demand zone from the daily time frame. After price tap into that demand zone, what happened? We have this internal break of structure. We have this internal break of structure. Then we can see that price has been breaking structure from the daily time frame. We can see that gold actually is bearish, but here is something interesting. We have this break of structure here. Another break of structure, this one here. And this break of structure from the daily time frame. But there's something interesting we need to pay attention to. Remember, an area where price has reacted to either from the downside or the upside becomes a strong support or resistance level. We can see that price reacted here multiple times. Now gold is pushing up. Gold is giving us a signal. If we check here, what is happening here? These two candlesticks you are seeing is a candlestick pattern we call bullish engulfing candlestick pattern. This is a candlestick pattern. So price is showing us that buyers are ready to push this price up. Remember, we still have these supply zones here that causes this break of structure unmitigated. We still have this level here unmitigated. So we are anticipating price to come back to this level. But then let's pay attention to what is happening around this area. We can see this candlestick formation here from the daily time frame, which means that there is a high probability of price violating this high here. There's a high probability of price violating this high here, giving us a change of character. How SMC strategy is being traded. If price causes a break of structure, price was supposed to react to the origin that caused that break of structure and sent the price down. But in this situation, there are two things involved here. It's either price respects this supply zone by sending this price down, or price violates this supply zone, giving us a change of character. Once we have this confirmation from the daily time frame that price violated this high, giving us a change of character, let's expect price to pull back into this demand zone, then continue to buy. But let's move down to the 4 hours time frame. From the 4 hour time frame, here is an interesting area. We can see that price is reacting to a key resistance level. Like I said, I am going to refine this break of structure to the 4 hour time frame. I'm refining this break of structure to the 4 hour time frame. We can see that we have this break of structure, right? What happened? This was the origin that caused that break of structure. This was the origin. Price violated this origin because when price caused this break of structure, we saw a liquidity sweep. Multiple rejections here. We saw this liquidity sweep. After price swept this liquidity, price moved up with an impulsive move, leaving behind this order block. Price left behind this order block with an imbalance with this fair value gap. So what happened? Price retraced back into this fair value gap, retraces back into this fair value gap, giving us an internal break of structure. I always emphasize on paying attention to the internal structures because those are areas where price might react to, or those are areas where your entries might be sitting. But if you overlook the internal structures, you might miss a lot of trades, a lot of chances of you taking a trade. So after price give us this break of structure, what happened? Market retraces back into that origin. Now we can see another break of structure from the 4-hour time frame. We've seen this break of structure, and what happened? Price left behind an order block with an imbalance. And also price is sitting at a key resistance level. Price is sitting at a key resistance level. This resistance level can send price back to mitigate this order block and continue to buy, or price might violate this resistance level and continue to buy up. But seeing the reaction from this resistance level, we've seen multiple rejections. So what are we expecting? We're expecting price to send back the price back to this order block to mitigate this order block. But if the sellers are in the market, if the selling pressure from this resistance level is high, it can actually violate this order block. And once this order block has been violated, it becomes a breaker block, which means price can actually retrace back into that breaker block and continue to sell. This shows that sellers are in the market. But if the selling pressure from here is not high, price can actually just mitigate the order block, then continue to sell. We continue to buy. So let's move down to our 2 hours time frame. So this is how I do my top-down analysis. From the 2-hour time frame, we can refine the order block to this level. Then from 1-hour time frame, we refined the order block. It's still sitting at a good position from the 1-hour time frame. We can see it here from the 1-hour time frame. But then if we want to catch this correctional move, because we've seen multiple rejection here, if we want to take a sell, from here, we'll move down to the 30 minutes and the 15 minutes time frame to look for a change of character, that will be our confirmation that gold is ready to buy. So we can buy to this level depending on the momentum that price will create from this resistance level. So we move down to the 30 minutes. From the 30 minutes, we also need to pay attention to what price is doing from that resistance level. From this resistance level, we need to pay attention to the internal structure, this internal structure that price is creating. From the 30 minutes, we can see, if we move down to the 50 minutes, I believe this area here will show, we can see it's this internal break of structure. Price came back into this origin, giving us another internal break of structure. So like I said, paying attention to internal structures will let you know where price is reacting from and where price is heading to from the moment. So now, seeing this internal break of structure, this was the last break of structure, right, to the upside. So now we move down to the 50 minutes time frame. From the 50 minutes time frame, we are paying attention to the internal structure. So what happened? We can see that this here was the last break of structure, and we can see a liquidity sweep. There's this liquidity sweep, price giving us an internal change of character. You can see very tiny. It's very, very tiny. You have to pay attention to it. An internal change of character. This internal change of character. You can position for a sell here. We can position for a sell there. You can position for a sell there. For a sell there. Then this internal change of character, we can see this tiny fair value gap. That tiny fair value gap. And here we will consider our liquidity. All of these are internal structures that price. So we can see this is how I do my top-down analysis. So I want to, make sure that my stop loss covers this last week rejection. Yes, so keeping it like that, then we can send gold down to this level here. So we can sell gold down to this level. So this is it. We can sell gold down to this level. So this is how I do my top-down analysis. Just keeping it simple. This setup is not a guarantee that it will hit XL, or it's not a guarantee that it will hit TP. Like trading is a game of probability. You just position there. But then if you can, this XL is about 104 pips, but if you want to make it wider, that's still okay. That's still okay. So let's see what happens here. Let's see what happened here. Let's see how this setup goes. But so drop in the comment section. Let me know what you think about this good setup.